We're joined today by Sam Budiselik, Managing Director of Cash Converters. Sam, thanks for your time.
Thanks for having me, David. Yeah.
Cash Converters, a well-established bricks and mortar business, not well known for its tech, but it's clearly now a tech company.
Yeah, we've invested a lot, David, in recent years, and a number of retailers have, but we've really had to build our own credit models to power our loan books. So our business model traditionally was known for the buying and the selling, the retail side of the business. What's happened now with the business is it's grown to be a big personal finance provider to our customer segment. And that's a really interesting part of the economy when you're looking at a subprime borrower, and that's traditionally someone under a 500 sort of credit score in our market, presenting to our business with a need for cash, sometimes no credit file or a very thin credit file. We really need to be able to build a position on that customer as to whether the loan's responsible and will we get repaid. And that part of the business has really grown to sort of over 65% of our earnings now. So the stores are really important still, not only for the retail trade, but they operate a branch sort of broker network for us. We can meet customers in store, help them assess their need, help them meet that need in a responsible way. But then online, we've just seen massive growth online, with our retail trading now nearly 20% of our turnover online. But the lending business has really grown phenomenally, and we receive 50,000 applications a month for unsecured finance, personal loan applications. So you can imagine processing that sort of scale, needing to use the technology to build really good credit risk models, quick assessing processes that are responsible. Technology is the only way you can solve that when you're writing a small loan to a customer.
Where does the growth come from? When you're looking forward, you've built this proprietary software, you've embedded technology into the business.
Yeah.
How do you grow?
Yeah, we had, I think 2016 as recently as then, we had one loan product. Now we've got four. One secured loan, vehicle loan, unsecured loan product. We're seeing loan development product continue. We're innovating to try and offer our customer segment what many of the Australian sort of borrowers are offered by the banks. So, we think there's about 3 to 4 million Australians that are excluded from accessing mainstream finance, and so it's a big part of the market that has a need. So we're innovating our product development using that data to build new products. We also do still operate a franchise network in Australia, so half of our 150 stores are franchised and half corporate. So as we acquire the franchise stores into the business, their earnings accretive immediately. They're cashy stores, cashy people. It makes sense for us to buy them back where we've got a natural seller, someone who's been in the network for a long time exiting, and that's growing our store network, as are new greenfield locations. And then internationally, we've got 700 stores in total, about 580 offshore, and they're operated by master franchise partners. So we have got the opportunity to seed investments in those networks to help them grow in the UK. In Spain, we've just announced a transaction there too. So I think we're proud of being in Australian roots and being a very well-known Australian brand, but going global.
And are the finance products global?
Yeah, we offer the unsecured finance product is what we've really worked to develop in Australia, and we don't offer that offshore. There's a couple of reasons for that. As you change regulatory regimes, it can become quite complex. So to be conservative, to de-risk the business, we offer the unsecured finance in Australia, where we have a very well-regulated market. Offshore, we tend to operate a retail buy-sell and a pawnbroking type lending market, a secured lending market.
Importantly for investors, a dividend-paying stock.
Yes.
That regularity of cash returns.
Yeah, we've been in operation for nearly 40 years. We're a big business. We've got millions of customer records. Like I say, our monthly throughput, that's high volume, high transaction type business. And we've built a massive revenue base. When you look at a small cap to have around 220 million revenue a year, an EBITDA north of 50 million, it gives us the opportunity to keep investing in our network, but to also return to shareholders in a dividend. And we've made a number of half-year 1 cent payments now. And on our share price at that rate, it's a fairly decent yield too. So we've got a lot of franking credits on our balance sheet. We'd love to reward our loyal shareholders and to return some of that benefit to them. We've started that as well.
Looking forward, from an investor point of view, what are the key metrics they should be focusing? What are the milestones they should be looking at?
Yeah, I think, look, everybody's aware of the cost of living increases, and our customer segment's very sensitive to that. Probably less so to interest rate increases directly. Not, with a lot of our customers rent, they don't own a house and a mortgage. However, it does push through the system. Transport, communication cost increases are really putting pressure on people. So our local markets are really growing, and I think as we get better at sort of picking the right borrowers to lend to with our credit models, we've got opportunity to continue growing in Australia. And we think we could add another 50 stores in Australia just based on demographics to reach more customers. And then globally, there's a similar trend. I mean, all the world's sort of moving in unison at the moment with the cost of living pressures and rate increases. So for an unsecured segment, a subprime segment of the economy, we offer a really great service and an option that, a lot of these people haven't had access to finance. And I think the beauty when they come into our business and deal with us is that we're then building that borrower a profile that allows us to then get a feel for how they're performing, reduce their costs, and help them become a better off a lender. Yeah.
A well-established business with a clear focus on returning value to shareholders, global opportunities, local opportunities, quality technology and quality teams. Exciting times ahead for Cash Converters and its shareholders. Sam, thanks for your time.
Thanks for having me, David.